All right, hey there. Good morning, everybody. Christopher Franks with Texas West Capital. It's just a little bit after 11 a.m. Central Standard Time here on Monday, the 16th of November, 2020, in San Antonio, Texas. 2 days before my birthday, middle of the week. What was worse growing up as a kid than having your birthday in the middle of the week? I mean, that was always so awful, wasn't it? But anyway, these days, I'm lucky if I remember when it is. So anyway, hopefully you guys did well. You had a good weekend, kind of got away a little bit. If not, hopefully you're making time for that this week, guys. I can't impress upon you the importance of taking time away from the charts. You absolutely have to, and I don't mean if you watch it, on your desktop daily, and then you're getting away from the charts is looking at it on your phone somewhere else. No. You've got to get away from. You got to not think about it for a good 24, 48 hours. If you can do that, it'll help get rid of a lot of the stress that builds up during the week when you're watching it. So it doesn't have to be the weekends. It just has to be some point along the week where you actually take time away and you don't do it. And I'll be honest with you guys, it's important to do that with all electronics. Get away from your phone, your iPad, your computer, all that stuff for a day or two. Excuse me, every week. It'll do wonders for you. So hopefully you guys are taking that to heart and doing that. As always, if you haven't joined us, please do so at howtotradetowin.com. We'd love to have you there. Again, Tier 3 itself has over 30 hours of educational video content. I've got more in the works right now that I'll be putting out here by the end of the year. We've got over 50 setups a week usually. Everything from our normal hot takes that we do 3 times a week, which are our setups, to the requested charts and everything. So lots of opportunities there to trade. And then, of course, we've also got, above all that, we've got another 20 assets that we do daily and intraday across cryptocurrencies, Forex, gold and silver, oil, natural gas, the indexes, including the S&P E-minis, stuff like that. So a plethora of things for you guys to trade and to keep up with. And by the way, you can get those intraday and daily asset updates there with Tier 2. Yeah, Tier 3, and you get the basic education there with Tier 2 as well. Tier 3 just includes, the extra weekly live stream that I do with Tier 3 members. I kind of give them tips, tricks, and techniques to get them trading successfully right away. Different ways of looking at the market and ways that you can profit off it, as well as going in depth on certain things. For instance, one time we did a deep dive into Elliott Wave triangles and how to properly spot them and count them, and stop loss and your target and all that based on it. So we do a lot of that. We did a question and answer session a couple of weeks ago as well in there. And whenever you join, of course, if you're Tier 3, you get access to all the previous ones as well. So getting on to 3 months of those now. Those are usually about an hour long when I do them. So lots of good stuff in there, guys. We'd love to have you there. And you know what? Better than all that is the people that we've got there. So there's a reason they stick around for 6 months or more. Let me see here. Who's here already? Let me see. LG, good morning. Hey there, Esteban. Good to see you. Baker checking in as well. Joe the Butcher. What's up, man? Alonzo, hey there. Good to see you. Greg is here. Casper. Crypto Mowgli. Who else we got here? Casper says, what a morning for Bitcoin. Sadly, I'm out. Not feeling cozy trading at these levels. Too much uncertainty, according to my limited knowledge. Yeah, sometimes, guys, depending upon what makes you... I think the problem is most of the time new traders or retail traders in general, they come in and they think they always have to be in the market. They think that if they miss a move, they should have been in there. The reality of it is, guys, not all moves are equal, whether they're up or down. And it all starts with you figuring out who you are as a trader investor first. I mean, it absolutely starts and ends there. If you have not done that yet, then you're trading blind. There's a reason that you're potentially losing a lot of money on there, right? So, again, guys, you continue doing the same things that you've always done, you're going to continue getting the same results that you've always had. You've actually got to go in there and change what you're doing. You got to figure out what you're doing wrong. And for a lot of you, it's just the stuff at the beginning that nobody wants to do. This, okay, well, who am I as a trader or investor? Answer all the questions that I've often said. I've often put out there. Go through all that, and that way it lets you know. And you know what? For some of y'all, maybe this is an okay time to trade. For others, based on what you know and your time frame that you can trade, and other commitments you got going on, this may not be a very good time for you to be in the market right now. And if it goes up a little bit, it goes up a little bit. But you've got to stop looking at it as, oh, just because it went up or down or whatever, that you should have been in it or something. That's nonsense. That's how you're going to lose money thinking like that. All right? So let's keep that in mind. Hey there, Nevlusian. Good to see you. Chris is here as well. Mike Kane. Sharon, what's up? Blocktex here. Sir Hole. Jonas. LXT. Brian Riley is here. He says, I see FOMO. Let me see here. LG says, if you mention Elliott Wave triangles, Julius comes crashing through the wall like the Kool-Aid man. Julius is our triangle guy, that's for sure. I love it. I love it. Hey there, Daddy OJ. Good to see you, man. Dennis is here as well. Ciro Viotti is here. I know I probably just totally screwed that up, but I am, Texan. So sometimes my enunciations aren't so clear. Crypto Girl, good to see you. And Bianca's here as well. And Amber Lee, good morning. Let's go ahead and jump over and see where we're at, guys. So on Friday, let me do it this way. On Friday, I always do my end of the day updates. And so at the end of Friday there, we were here. Let me zoom in a bit here. And I left on the Friday there on my BMA evening video update. We were kind of like down in this area, and I let them know. I said, listen, at the end of the day, I said, everything else aside, I said, if I'm looking at this chart, we're going down over the weekend. And sure enough, that's what we did. Now, I did have an initial target that I wanted to see hit, which was this VPOC down here around 15.4, 15.5. And that's actually, let me see here, this right here, this high volume node. I ended up saying, well, before it gets down there, we could get bounced right in this area, which is this demand structure right here. And that's what happened. We didn't even get past that. And so, there's a lot of overlap, a lot of, looks like 1, 2, 3s going on and whatnot. I mean, if you look at this looks like a 1, 2, 3, 4, 5, right? But it can't be because you've got 3 up. And so, if it's 5 down, if you're moving up here off the swing high and you got 5 down, you should only have 3 up, but it shouldn't go above that swing high. If it goes above that swing high, you've only got 3 down. So you have to look at this as an A, B, and then 1, 2, 3, 4, 5. Here's a C. So then that means, okay, so there you go. So off that, you've got a 1, 2 here. And then what do you have? Well, you might have a 1, 2, 3, 4, 5. So a 3, 4, and a 5. I think that's probably a pretty good interpretation of this. So you've got a 1, 2, 3, 4, 5 finishing up here, just a bit higher. But that doesn't mean that that's the end all. Now, as you can see, you've come in here sideways on the 1 hour and the 4 hour here between the pivot and the R1, and it went up to the R1. So again, usually you get a rejection there and a pullback before it heads higher. So at this point, there's a couple of things that I'm watching. Excuse me. There's a couple of things I'm watching here. So I'm interested in this local channel right here, where we've just kind of popped right above it here at the R1 pivot. And so if we get continuation up through that R1 pivot there, we generally, the way we trade, channels is we'll look for price to target the channel resistance, which may take it right around the R2 pivot. If we break out impulsively through this channel resistance, especially if we can come back and retest resistance as support and then push up, then we'd look, my next target would be this larger channel resistance, potentially the R3 pivot right there. If we get rejected in this area and head down, then what you want to see is you want to see probably price bounce no lower than basically this area right here, this 16,020 area. You want to see it come down, and that would keep it here on the support. See it bounce and head up higher. And if it does, then you've got potentially what amounts to a 1, 2, 3, 4, 5 going up, right? But if you decline below this pivot, first of all, it takes you below the support of this channel. But then below that pivot, all of a sudden, immediately you should be looking at least to this area right here. This 1530 to 1566 kind of area. And then, of course, this one down here at 14,485. And then you've got this purple line just below the S2 pivot there at around 14,066. This red line at 13,933. And that's kind of how I'd watch it coming down there. But just because I'm really just not sure what this count is leading up to this. There are more than a few. And so it's better just to kind of play the levels as it starts working its way out until you can get an idea of that larger, if it's going to reverse or if it's going to pull back, that larger pullback, to get an idea if it's 3 or 5 waves. And then that kind of gives you the ability to kind of zoom out a bit and get larger targets coming off it. But I mean, that's basically what we're looking at locally here. So, not a whole lot, anything special really going on. I mean, I was looking at this originally, but I'm not sure I'm such a fan of this at the moment right now. But you've got this possible wedge-ish thing looking here. Just from a pattern point of view, you've got a wedge here. See that? And this isn't, I'm not talking about a Elliott Wave ending diagonal. I'm just talking about a wedge, just a general wedge. So you've kind of got that going there. And if the wedge breaks down, you usually expect price to at least retrace toward the beginning of where that wedge was. So again, it'd be this kind of 14,486 area there. Again, I'm not sure I'm really on board with the wedge, but it is something possibly there. So if we get a rejection in this area, especially if it drops down through that support, then you're probably looking at that wedge there, which means you should probably be looking at lower there. Based on the height of the wedge, I give you a target of about $1,755 below the point of breakdown. So again, takes you back down here toward the beginning, maybe the S2 pivot down here. Again, if you want to take it all the way, you're looking at here, if you get rejected this R1 and you drop down below the pivot, especially the swing low right by it, you should be looking at the S1 and potentially the S2 pivot. I mean, that's just the way that you would generally trade that as pivots go. Simple and easy. Just look at those, those major areas. Of course, if you get rejected up here at the R1 and you come down and you remain above the pivot and you reverse and you rally back up above that R1, well, that says, well, okay, you're probably headed up here to the R2, maybe the R3. So that would be the 17,440 kind of area and then 18,380 area. And you go 18,380 area, oh my gosh, that means we're so close. Well, yeah, it is, but that also means, just to keep it all realistic here, guys, if you insist this is 3 down here, A, B, C, as we've talked about, A, B is a triangle, and C down. Again, remember, this could potentially be an A, a B, and a C up here. And if you're getting up there, that 18,300, that puts you above 90% retracement. So ABC down followed by ABC up, and a rejection in that area says you've probably got a flat correction here. If it's a flat correction, then you might be looking. By the way, if you guys want to ever just come back and kind of pause the video and get all these levels here, these are the major levels I'm interested in if price comes back. If you fall through one of these impulsively, and you close below and continue watching, then I'm looking for the next one. So these are the set of levels there. But if this ends up being a flat up here toward this, this 18, let's see, maybe 18.4 or whatever level there. Well, I mean, at that point, you're looking minimally for retracement down toward this 9,000 level. They get you about a 61.8 retracement. And that's the first place you always look. But usually what happens with a flat correction is price comes down near where wave A terminates. And so, again, you could see it coming all the way down here toward this 3,000 to 4,000 area. Notice I didn't say below it. Now, if it's a flat correction, ABC, ABC, then usually you have 5 waves down toward near where wave A terminates. Could it go below it a little bit? Sure. But generally, you would want to look at, the 61.8 to begin with, which would be around that 9,000 area. And then if it continues on through that, you'd be looking down here toward this area. In that case. Again, if this is an ABC down, then, it is possible this is a 1, 2, and this is 1 of 3 heading up. If that's the case and it gets up there and turns around that 18.4 level, then, again, pulling back here, you're probably looking, again, still at that night, maybe the 70.5 here at 8,100. You got the 61.8 up there at 93.69. The 78.6 is kind of in no man's land right here, not low volume node area there, so, or not low within this high volume node here. It's the dip back. So I'm not too interested really in that. Now, if we were to reverse kind of from where we're at, around this 16.5, 16.6 area, kind of like that, well, then your 78.6 becomes this high volume node down here at 65.24. So if this is a 1-2 and this is wave 1 of 3 finishing out here, you could expect it then to pull back here. We won't really know a lot until this thing really kind of pulls back and does a decent pullback. We can get some count going on it to figure out, what may or may not, the count be in this area if it's bullish. But I'm just, again, I'm just warning you that don't get overly excited if it's getting above 18 because, again, that brings it to that possible ABC, and you have that move down. Let me see here. Kind of got this ascending channelish thing I've kind of shown you before. And if we look at that, whoops. If we look at that, then, just a bit higher here at around 17.5 or so would keep you within that. Bigger term picture here obviously is this channel possible wedge. It is possible that, again, like I was showing in the shorter time frame, that you've got a wedge going on here. That broke out above there, so you'd have to look at it kind of like this. Again, I'm not sure I'm such a big, believer in that wedge. But, if anything, we got the channel going here, and if you get a breakdown of that channel support, again, this is big picture stuff, looking at the daily, if you get a breakdown of that channel support, you're looking at about almost $5,200 below the point of breakdown. And so that gets you right there around, 8,500 or so. Well, depending on where that breaks down at and how long it takes to get down. But, it could be 8,500 to 9,000 kind of area. And so that would align, again, with that 61.8 pullback on a flat correction here. I guess you could always look at a triangle as well. But, if you were to reverse in that 18 to 19,000 range prior to that all-time high there, to me, that's more likely to be, if it's going to be still a corrective overall structure, it would make more sense that it would be a flat correction than a triangle. But you could still watch it that way, ABC. The other possibility, is if you get 5 down here, so 1, 2, 3, 4, and then 5, that would give you an A, and then A, B, C would give you a B. But then you'd be looking for further down because this would be a zigzag correction here. And so you'd be looking at that 2,400 or lower that I've been talking about. If you were to look at it, as 5 down here. And you can get 5 down. I've counted it as 3 more times than not as an ABC. A, B as a triangle, and C. But you can definitely get a 1, 2, 3, 4 as a triangle, and then C down, or 5 down as A off that as well. So, again, guys, there's a lot of possibilities going on here. 4 hour and your daily are showing negative divergence in OBV. That usually leads price. Doesn't have to happen right away, though. But they also both have the bearish divergence showing up on RSI. Again, right here, negative divergence here. You've got a high, you've got a low, you've got a lower high, you've got a lower low. So you've got a series of lower highs and lower lows during that period that price here has been advancing with higher highs and higher lows. So, high, low, higher low, higher high. So again, 4-hour OBV is at least trying to make a case for a top being probably nearer than not. But even if it is, it may just be more a local top, maybe like some kind of 3, 4, 5 kind of thing. So a lot of possibilities going on there. Make sure you're not ignoring all this stuff that may be slapping you right in the face there. Jumping on back here. Again, I talked on Friday, the end of Friday there with our update. And I said, the way the structure looked up here, I said we were likely headed down. We did. Then we were sideways. And then we got this this other small IBR here. Price is kind of moving off that and heading up. And so that was a clear, trending move right there. We're getting some single prints up here. So we're getting a bit of a selling tail going on. That means you've got aggressive other time frame traders up there. So your positional traders, your smart money that believe that price is potentially overvalued up here right now. I mean, that's a large move in a quick, short amount of time, so it would make sense. Any pullback here, we've got this VPOC over here at right there at there we go, around 16,290 or so. And then we've got this one over here at 16,260. So any kind of pullback right there, that would be the first place I'd look to get a bounce, maybe 16,260 to 16,290 kind of area. If you continue on below that, 16,000 to 15,000. The VPOC's over here from 15,910 to 16,10 would be where I'd be interested in after that. Excuse me. Just looking at this this chart right here, this TPO chart. And then once you're falling through that, this one right here at around 15,4, I don't even know what that is, 15,420 or so, would be another area to watch as it continues coming down, just based on the TPO chart here. So, yeah, but it's got to actually come back off that first. And so, I think if you're trying to front run it, as we've continued to talk about for a very long time, you don't front run price. If you front run price, you're necessarily taking on more risk. If you wait for confirmation of some sort, it's likely to get you a better result more often than not. So, from this area, you'd be looking for a drop down through this support line and then through the 4-hour, 1-hour pivot right here. And those should kind of indicate, okay, well, we might have at least a temporary top in and we start looking at those lower targets that I've been talking about. But until it does that, I think, your buy should still be up while it kind of finishes its, what it's doing there as it's moving. So, yeah. Oh, let me see here. Hey there, Pixafin. Helder, good to see you guys. What's the best strategy to scale into Bitcoin again? Well, that depends on who you are. If you're not very risk adverse, you're going to want to wait for a larger pullback. But then, retail traders, they go, okay, well, they say, well, I'm not very risk tolerant. I'm scared I'm going to lose my money. Okay. So wait for a larger pullback. But what if I miss it? Well, what if I miss the big move up? See, and that's the thing. Retail often aren't really doing the things they need to do to be proper traders. They let the emotion get in there. The only important thing is that when you enter, wherever you enter, guys, is that you mind your risk management. If you do your risk management properly, no entry should be scary, because the worst you can lose is 1%. So it shouldn't be scary. But everybody's scared. Everybody's scared to enter. For me, honestly, right now, if you're trying to scale in, in trying to look at the least riskiest way of doing it, I'd look for a pullback. I'd look for $1,000 plus pullback before I entered, if that was the case. But again, if you're scared you're going to miss out on whatever, well, Enter on any bit of pullback. Pull back, pull back, pull back, pull back. And then just keep your 1% risk management rule there, in mind. I think that's just the way you do it at the moment here. I don't like entering right here. We're in major resistance area. To me, it doesn't make a lot of sense to really enter here. I think either you needed to have been in, or you need to wait. I mean, that's just the way I generally think about it at this point. I wouldn't be interested in anything other than maybe a short-term trade entering here. But even a short-term trade entering in here, there's a lot of questioning about where it may be in terms of, everything's showing up again. Multiple time frames, topped out. Stochc RSI really high, bearish divergence. Negative divergence with OBV. All this stuff coming in. It doesn't, but none of that means that price has to drop. Remember, guys, these indicators just tell you, listen, this is what's going on. But they don't say that price is definitely going to reverse at that point. And so one way we can look at it is definitely with the, let me see here. We had the, this chart on here. Remember, this was the, let me see if I can find it here. If we look at the exchange flows, inflow mean, moving average, and then we pop that on 144 for length. Let's get this style all done, same color here. Put that to area. Compare it with Bitcoin price. Go ahead and change the color on that so it's easier to see as well. And then turn off that. All right. So, I was warning you guys. Let me see here. Remember, the idea is if this gets above 2, it signals some kind of dump or larger selling going on, right? Or is going to be happening sooner rather than later. Let me see here. Where is that? There we go. All right, and so we put this at 2. And so, I warned you guys ahead of time that we were up above there over here. And so that's where it went. This is letting you know that it could still go up higher, but, we're above that 2.0, so be careful, right? So it gets up here, and then it ends up selling off. And so we end up selling off from basically 16,450 or so down to around 15,700. So about an $800 drop on that, coming off there. And now it's going up. And you notice on its rise up here, we've got more filling in here coming in. So, you can continue to watch that. Obviously, if you're in Discord with us, I'll keep you updated if that gets it back above 2 as well. But again, when it's getting above 2, it doesn't mean it's going to dump right away, but it means that the odds are greater that kind of dump or that large amount of selling is going to come in. And so sure enough, that's what we ended up having there. What was this? This was the 12th. And this finally dropped there on the 13th. Yeah, about 24-hour notice. Gave us about 24-hour notice right here. So, again, this is building up again here, heading back up. So we'll see what happens with this as we get through here. But yeah, as far as scaling in, again, I don't think this is necessarily the greatest area to get in. I think you're taking on a lot more risk than the possible return in this area right now. Now, that said, obviously we're pushing up here, so I'm looking at potentially heading up here toward this, toward this channel resistance, R2 pivot maybe, if we can get, a close above and then, follow through. But there's a lot of overlap, as you can see here. So, all this overlap, this continued pushing and no real strong pullbacks. It's kind of what happens, often at the end. And sometimes in different areas of an advance, but often at the end you get that kind of last, like that final. Everybody, retail starting to FOMO in, and so they're trying to, to buy, and so you keep having things like this here, where sellers come in, sellers. and they're just selling to the buyers who are continuing to come in. And we end up seeing, we'll see who wins out in the end there. But for right now, there is some definitely some buyers out there still. So we'll see how that all plays out there. Excuse me. Jeez, these idiots. Sorry about those guys coming in there just want to buy followers. No, I don't want to buy followers. I haven't bought I've been doing this live here for 3 years. I haven't bought followers. Why would I start now? It's just ridiculous. Anyway, Spiral Architect, good to see you. Sean's here. Guglielmo's here as well. Let's see here. Martin, what's going on, man? Crypto Girl says, so thankful for Discord, able to check in over the weekend. Really appreciate all the great members sharing their TA charts and discussions. Kept me from FOMO, and members are like friends and fun. Yeah, I have to agree. Pretty great group of people we have in there, honestly. They're really pretty awesome people. So, hey, what's going on, Hank? Nah, you missed the same old rants. No good rants. Let's see here. Two Girls, what's up? It says, is it correct to use the market cap of Bitcoin to analyze it? It counts the available supply each moment. Sounds interesting to compare. I mean, if you want to do that sort of thing, you can do that sort of thing. I don't know that I really find it overly interesting myself. But if you want to follow it, you can follow it. I don't think there's anything inherently wrong about looking at that. But yeah, it's nothing I really look at on a constant basis or anything. Is YouTube selling those buyers? Maybe under these stupid screen names, right? But anyway, so yeah, getting the push up there. If we look at the DXY and what it's doing, it's still just being itself here. Again, I think we may have a 1, 2, 3, 4, 5. And so we may now have an A, B, C, maybe, I'm thinking. And if we are, then, right now we're just looking at this as an ABC. And so if that's the case, again, we usually look for the 100% extension. Let's see here. Where would that take us? Yeah, so right about that same area where I've got that wave 4 up there. At 93.54, 93.544, wave C would be equal to wave A. Again, usually the one-to-one relationship we look for on it. Now with that, it's still possible. This could be a 1, 2, 3, 4, and a 5 as an ending diagonal. It's possible, as I've got here in red. Let me kind of zoom out here a bit. There we go. It is possible we could have a 1, 2, 3, 4, and then a 5 here to get just slightly below that low over there. You get an ending diagonal, or again, could be a B, C, D, E, do a triangle before a drop down. And then at the very kind of out there, still possible, but I don't really expect it at the moment, is that this is actually the bottom down here. And in that case, I really don't see that. I don't know. You really have to figure out how that would work. I mean, maybe an ABC as part of a leading diagonal, maybe, and then this is an A and a B and a C. But I'm hurting to try and count that as bullish. The first thing we would need to see if this is maybe bullish here is an advance above this swing high up here. So until we get that, I think we still look at this as one of the two, either a ending diagonal or a triangle right here. But nonetheless, if this is it, then we should look for some movement up. And if we're getting movement up, that might give Bitcoin some sell pressure, some pricing, not some sell pressure, but some downward price pressure on it as it does it. So yeah. I don't know. As far as the DXY goes, about half of the pairs that make it up are kind of, they look like they've reversed. The other half look like they're in the process of potentially reversing. But there's no consensus on it being reversed yet. So, we'll have to look at that. Remember, the euro makes up about 57-58% of the weighted basket there that the dollar is compared against to get the DXY value. And the yen makes up about another, I think, 11%. So those two alone are already almost 70% of the value against the dollar. So, yeah. Let's see here. Hey there, Christian. Thank you. I appreciate that. Weekends are definitely a great thing. Says, I have been in crypto for 4 years in a bunch of groups, and this one is the best by far. Oh, well, hey, I appreciate that. Thank you for saying that. We try, guys. At the end of the day, I don't try to gloss over anything. I don't try to sugarcoat anything or, make it really iffy. I don't try to just tell you what you want to hear so that way you guys continue to pay. That's stupid. What are you going to get out of that if that's the case? If all I'm doing is telling you what you want to hear, what do you get out of it? You just blindly trade up until it goes against you, and then you're confused and taken, and find yourself, wondering what the heck just happened. You weren't prepared for it. You end up losing money that you could have locked in. The goal, guys, is always just to help you see the markets more neutrally. And that seems to be a lot of issue with some people. I mean, not necessarily in our group, but, out there on crypto Twitter, where if you're not a staunch Bitcoin's going to 300,000 tomorrow kind of bull, then you're not looking at it neutrally. Well, no, I think at that point you're looking at it quite emotionally for the bullish side of it. And it's really easy to get caught up in there. That's why we don't do that. Now, again, I'm a fan of Bitcoin. I'm a bull, overall, for sure. And it is possible that we could be in a bullish move right now, but until we get some clarity on the count, as far as a decent pullback and whatnot to really kind of get us an idea of where that count may be and kind of maybe take out the bearish counts, I think, assuming that it's just going to go up from here is a lot more detrimental than not. Because what does that mean? That means you'll be buying the dip as it continues to fall. And if it is this bigger correction, even if it's only coming down to 9,000, if you're buying every dip there, at what point are you going to give up and go, oh my gosh, it's going down and I'm being an idiot buying it? And then you'll sell out, and you'll probably sell out right there at the bottom because that is what we do emotionally and psychologically. That's what we tend to do. And so, we don't want to do that. We want to talk about, what are the important ways to look at this? We want to make sure we zoom out to the bigger picture, the larger time frames, and say, okay, what are those larger levels? Where are those larger invalidation and validation levels? Where are they at? What could possibly go wrong? This is the one thing a lot of traders don't do. And it's a very important thing that you should be doing. It's ask yourself, what could go wrong? Because you can't assume you're going to be right. That's just foolhardy. But you need to ask yourself, what could go wrong? And then figure it out and make sure that you're looking at that and watching that. And you've got those invalidation levels with that particular what may be going wrong scenario. And that way you aren't caught, buying at the very top or buying every dip when price is continuing to drop or selling every rally when it's continuing to go up. The other thing, of course, is the idea that even though we look and we often have, okay, well, if it gets up to here, then we might have this reversal here. Guys, I'm not saying that you should be front running that. Don't front run price. I'm a big believer in confirmations. If you guys don't know that yet, keep listening. I've talked about this for years now. I don't tend to front run price. I tend to look for confirmations. And so I can openly talk about, well, you know what, if this is going up here and this maybe this count, then we'd be looking for a reversal here. I'm not selling or buying at those levels. I'm looking for confirmation. Again, something right here, a confirmation I'm looking for is a decline through this ascending support and this pivot here. If I can get that, then I'm feeling more confident about this potentially at least being a local top, in this area, wherever it would be coming down. But until I'm getting that, there's still a lot of, especially with, price continuing to bounce off its previous resistance as support, there's, still a lot of reason to believe it could continue higher. I keep telling you guys, the tops of the movements are difficult to often come to figure out. So, you usually end up getting out in a range in the top. Not when I say the top in that way, I was talking about like retail generally talks about it, which is the highest price. It's almost impossible if you're at the highest price. We do it sometimes. Yeah, sometimes you get lucky if you do this long enough. But most of the time, don't expect it. Look for a good area to get out toward the top. Look at a good area to get in toward the bottom. Yeah, and then work from there. You missed my updates over the weekend, Sean? Do what I do. Don't trade over the weekend. There's a lot less volatility, a bit more nonsense that can go into the markets. It's not worth the headache, guys. I know, guys. And you think, man, but what if I miss a big move? It's always what if I miss. Well, the question is, do you want to learn to be a trader or do you want to be just retail? Because if you're always worried about what if I miss the move, that's a retail way of thinking. That's all emotional. If you want to be a trader, all you're interested in is that price is moving when you're trading. That's it. You don't care what happens when you're not trading because you weren't there. And I tell you what, when you actually accept that and you really kind of internalize that, it takes so much more stress out of trading. Because you don't find yourself constantly thinking about it when you're not there. You can go out, you can go on a date. You can spend time with your dog at the dog park. You can spend time with your kids or your significant other and not be so worried about what's going on with price all the time. There's a certain bit of freedom in that. Quite a bit of freedom in that. But if you're not doing it, you're a slave to the charts. You're tied into it. Always looking at your phone. And by the way, guys, if you're trading off your phone, if you absolutely do not have to trade off your phone, don't trade off your phone. The research that's been done shows that the worst trades are basically from phones. And that's something that phone trading is something that the new crop of traders have really moved to. But it's not a good thing it's not a good way to trade. It's very dangerous. So I would never trade from a phone. I wouldn't. To me, there's no reason to do that. You're setting yourself up to lose too easily. Let me see here. Hey there, Data. Good to see you. Crypto Girl saying wanted to give Adam a thumbs up for his help on a BCH question this weekend. Once again, so thankful for TWC Discord team and all the members. Thank you. Appreciate it. Adam's a great guy, man. I love it. I love having him with us, man. Especially because he's able to sometimes, help out there on the weekends when I need to, I do this all day, every day. Sometimes for twice as long as most of y'all work in a day. Those that are in tier 3 know. When we're doing hot takes, I'm usually getting done with my day at about 2 or 3 a.m. in the morning. And then back up around 6 or 7 the next day to get started again. So, yeah, it's good. I'd love to be there every day, guys, but ain't happening. You got to get some time away. Hank says, you have investors and traders. Unfortunately, in crypto, investors think they should trade their investments. That's why there's so many emotionally attached to bullishness on every time frame. Yeah. And Hank makes a good point there, guys. Again, we talk about most retail traders are defined by this idea that price needs to go up. Because they come in and they don't know what they're doing, but they've been told all these great, stories about how rich you can get. Again, I've talked about my XRP trade numerous times. Those of you following me know, and, I talk about it because it's a good trade. But it also took, 9 months, 8 months to pan out? It didn't happen overnight. And I didn't need it to go up. I knew what I was doing. But a lot of times when you don't know what you're doing in the market, you come in and you buy something and you need it to go up because, first of all, you put in more money than you should. You're maybe kind of, taking a little bit of that rent money and putting it in there, a little bit of that grocery money. Don't do that, guys. Don't do that. Start smaller if you have to. It'll take you, if you're trading properly, it'll take you a little bit of time to build up your base anyway. Stop trying to get there overnight because that's what's causing you to lose your money so quickly. Because you're taking trades you have no business being in that you shouldn't trade in because there's a chance. Or the way you look at it, you think there's a chance. Lack of risk management, you think there's a chance, and then you get this big loss, and then you can't sell, as it's dropping down because you're too emotionally attached to it. So, and then you refuse to sell, and then he gets this big bag, and and by the time you sell, if you sell, it's usually near the bottom. You lost a lot of money doing it. Guys, most of what we talk about is psychological and emotional because those are your biggest challenges as a trader. It's not this. You guys can learn all this. This is nothing. You go, oh man, Elliott Wave looks so difficult and it's so, and it's completely subjective. No, it's not. Not if you do it properly. But, until you put the time and effort into learning it properly and then practicing it for, a while, it's nothing that comes overnight, guys. But, until you're doing that, you're going to lose out. There's just, you don't want to be emotional about it. You don't want to think, oh God, I got to make all this money overnight kind of idea. And don't say, oh, it's not overnight, it's next week. Same thing, guys. Next month, same thing. You're not going to make $1 million next month unless you start with $2 million. Then you'll have $1 million left over at the end of a month if you're a new trader often. But, a lot of times as human beings in trading, people tend to overstate their ability and understate their flaws or their inability to perform. We kind of oh yeah, whatever, kind of push off that loss as nothing, and then we kind of think bigger of ourselves than we are when we're trying to make a positive trade. Again, it's all psychological, it's all emotional. Those are the biggest things. You can learn all the rest of this stuff. Anybody can. But you can learn all this, but unless you get control of that emotional and psychological side of what you're doing, it won't matter what you know on this because you won't follow through. You won't do the things you have to do. You won't wait for the invalidation or the validation levels. You'll keep jumping the gun or you won't be able to pull the trigger. That's the long and short of it, guys. I'm going to tell you right now. But out there trying to sell you their system saying you're going to be rich overnight if you use this system. I've told you before, stop listening to that nonsense. Because until you get your emotion and your the psychological side of you under control, even if that system really is successful, you will not notice that. You're going to lose a lot of money with it. And then you're going to blame it on the system, which, let's face it, most of the systems are. They are a bunch of nonsense. But even those that are potentially profitable or could have the opportunity, the potential to be profitable, again, it's your inability to control your emotions that is going to cause you to not follow through as you're supposed to. And then it won't be their fault, it'll be your fault, but you'll blame it on them anyway. So yeah, be careful with that. Let's see here. Hey, Teo, good to see you checking in. Definitely watch it afterwards, sure. Let me see here. Martin says, today is hard for an investor. S&P is up, NASDAQ is up, gold is up, Bitcoin is up, bubble is everywhere. It's a difficult time, guys. And, the fact that you can look around you and see all the amateur traders out there, retail basically, talking about how bullish they are on everything without really considering the possibility that they may be buying the top precisely because of how bullish they are, and failing to recognize that. Yeah, it makes it difficult. It does. But again, guys, the most important thing you're ever going to do as a trader, and ever do daily as a trader, is your risk management. That is where you make your money. And so the thing is, no matter what the market is like, if you've got solid risk management under your belt, you can go in and trade that market without fear because you are limiting your loss, as you should, that 1% or less. But again, when you do that, a lot of times new traders, they'll come up and go, but that means I have to trade really small and I'm not going to get rich tomorrow. I mean, that's basically the answer they give me. Yeah, but you're not going to get rich overnight, guys. You're not. And as long as you keep treating like that's what you're going to get, that you're going to get rich overnight, it'll continue to take your money from you. There's no limit of the number of people out there who will gladly sit the opposite side of your trade and take your money, guys. People that have a lot more experience and a lot more heft to kind of push around. Yeah. Let me see here. Um, Amber Lee says, I want to change Amber Lee to Fat Little Indian. And you don't charge enough. That was the problem with my last trade. I put in more than I should. I'd like to stay about 70% liquid. Not that I know anything, but I'm learning your strategies. It takes time. It definitely takes time. And the thing is, guys, I can sit here and I can tell you day in and day out what you should and shouldn't be doing in general. But let's face it, as human beings, a lot of times we're going to make those mistakes. We need to make the mistakes so we can kind of really lock it in our head. Man, I should have listened. I had a lot of that when I was learning. Listening to professional traders and people that I met and really kind of siphoned ideas off of, and I kind of ignored them. I was like, oh, whatever. And then I lost money. I went, man, I should have listened to them. It is what it is, guys. It's just part of being a trader, part of being human. But that's why, again, the risk management is so important. Because as long as you limit that risk management, as long as you limit your loss to that 1% or less of your portfolio, there's no fear in entering a trade. There's fear in entering a trade when you can lose a lot of money, like a large percentage of what you're doing. If you're losing a few bucks on your entire portfolio, basically, there's no fear in that. Who's scared to lose a few bucks? You shouldn't be. The Fat Little Indian think he's throwing me off. Oh, man. Only you can get away with that, though. I can't get away with that. I'm way too white. I'm clearly not Native American, so I can't. You, my friend, can, though, saying something like that. How does funding work for a trade you hold for 9 months? What do you mean, how does it work? You have to pay your funding, depending on wherever you're getting into, as often as you're required to pay it. Now, if price is continuing to rise over that 9 months, then the funding isn't such a big deal. If it starts stalling out and going sideways, it starts costing you more and more money. Because you still have to pay every, whatever it is, 4 hours or daily, depending on where you're at and how you're doing it. Yeah, if you've got funding, you've still, and if you have to pay, when you have to pay, you'll still have to pay. Now, you're going to collect, at those times when you should be able to collect. But yeah, you're going to have to continue to pay over that time. And those costs need to be realized when you're looking at your profit. Just like if you're paying a commission, paying a commission to buy and paying a commission to sell, you've got to always incorporate those costs into your, subtract them from your profit or add them to your loss, to get a real reflection of how much you actually lost in that trade or how much you may not have won in that trade. Now, let's see here. Let me see here. Everybody knows how to lose at the beginning. It's just making it a point to decide. You guys you really heard my story, and I lost a lot in the beginning. I finally decided one day, listen, I'm tired of losing this. I want to actually learn what's going on here, and that's what got me going to where I am today. Yeah, but you've got to make that conscious decision. Some people say, "Oh, I'm tired of losing. I don't want to lose," but then they don't change anything. You have to make that conscious decision that you want to change, and then you have to do it. Again, if you continue to do the same things that you've done, you're going to continue to get the same results you've gotten. And if you're trading out there and you're consistently losing, then you should know that whatever you're doing is not working appropriately. So there's your first clue. So you have to take the initiative to change. You have to take the initiative to go out and figure out what are you doing wrong. Who cares about your ego? Who cares? Get rid of it. And that's, this is a big problem with social media, not just with trading. I got to get ready to go here in a minute. Not just with trading, but with just everything in life, guys. Social media puts you out there and you put yourself out there, and then you feel like you can't ever be wrong. The problem with feeling like you can't ever be wrong is that you don't ever change your mind. And I'm going to tell you, especially in trading, there are times when you definitely should change your mind. Does it happen to me? Sure it does. I'd be an idiot. I'd be a liar and a half if I told you it didn't. But it's how you, again, your risk management and how you deal with that, and deal with being wrong and accepting that. You've got to get out of this, man. Social media can be great at times, but really overall I think is one of the worst things that's ever happened. I really believe that. It's caused so many mental issues now, mental illnesses coming out as a result of it. You know, and people, they see people living these lifestyles that they want to lead, so they start spending more. You know, there was a quote that today, you know, the rich wear the torn pants and the Converse, and the poor wear the Prada and the Louis Vuitton, right? And that's the truth. You know, the poor are trying to live a lifestyle, or trying to look like they're living a lifestyle. So they live way beyond their means. Well, that translates into your trading too. You trade beyond your means. You trade larger than you should. You take trades you shouldn't take. You can't admit when you're wrong because you're so worried about what somebody else is going to say. My God, guys, you've got a block button. Just block them. Who cares? Seriously, if you don't feel that you could do that, I'm giving you permission right now. If somebody comes off and acts like an idiot to you, plain off, if they're not coming out decent as a decent human being and discussing something with you, if they're just coming off spouting out of their rear end, you have my permission. You are completely within your right to go out there and just block them. And don't worry about what they're telling somebody else. Who cares? It doesn't matter, guys. What matters is you are doing things that you need to do to make sure that you come out a success as a trader. As long as you continue to worry about what some other idiot online says, you are not going to get there. You are absolutely not going to get there. And you go, oh yeah, but I see these things. Some of these people I watch and these bigger names, they're like, oh, well, you know, I would block them, but you know, that's the freedom of speech and all. Freedom of speech, my rear end. It's your timeline, guys. You don't have to listen to anybody you don't want to listen to. Have some respect for yourself. Do what you need to do for you. You have my permission to do that. You need to do that. Stop keeping yourself from doing those things. And, you know, I would say you don't need my permission. You really don't, but you might feel like you need somebody to tell you it's okay to do that. So I'm stepping out there. I'm being that guy to tell you it is okay to do that. Do it. Not just online, but in life. Stop dealing with people you don't want to deal with. You don't have to. Who cares what they say behind your back? They are not paying your bills. They are not living your life. Kick them to the curb. Stop living your life trying to live up to somebody else's expectations. Because they don't know you or what you've gone through. They don't know what you've overcome to be where you're at today. They sure as heck don't have any clue about how successful you can be in the future. Stop letting them decide what you can or can't do. Okay? Sorry, guys. Bit of a rant there. I feel so passionately about it. You know, again, I see it all the time. I talk to people, you know, young traders all the time, older traders all the time. You know, and it's just, social media is a mess. And y'all basically live on it. Y'all know I can't stand it. So while I'm on here, if I can say some things that hopefully have a positive impact on you, you know, preferably what I just said there, then I'm going to use my time to do that. You guys need that. Let me see here. Hey, what's going on, Othman? Do I expect a blow off top before reversal? I don't necessarily expect it, no. I mean, I could see it happening, but I just see grinding up right now. I don't see any like strong out of nowhere buying and just propelling. I see just buying the dip and then it just kind of grinds up a little bit more. Buying the dip kind of grinds up a little bit more. There's a lot of selling going on in these areas. So while it can happen, I don't necessarily expect it to happen. Crypto Mowgli, you have a great one as well. Hank says he's going to call a top of just below or above 18K. Not the only logical option, but the one I base my strategy on, he says. Or that he bases his strategy on. Hey, Casper, you're welcome. Thank you, sir. Let's see here. Brendan says it would be a very Bitcoin type of thing to get really close to an all-time high and then reverse hard. Yeah. Hank says Bitcoin loves the 886, the 88.6 retracement level. Yeah, you know, and not just even Bitcoin, but, you know, a lot of things. You know, you'll get up to that all-time high, and there's going to be a lot of sellers in there, you know, been coming in. So it's, you know, is the market ready to buy above that? Everybody out here, again, I got to get going, guys, but everybody out there, again, is pushing all these companies are going to be doing this, all these companies. I don't necessarily believe that, guys. They may. I'm not saying they won't, but I'm saying all this sureness in these other companies are definitely going to be out there buying all this and doing all this. I think that's a lot more hope than anything else, speaking like that. There's nothing going on that, for many of them, makes it plausible for them to do it. Remember, a lot of these companies, if they're publicly held, and whatnot, and, even if they're not, I mean, if you're a director of a company, you've got certain legal requirements, as far as not making stupid decisions. And if you make what turns out to be a stupid decision, you can be held liable, financially liable. Depending on, on what your position is and what the company is and whatnot. I mean, it's not like anybody can just go, oh yeah, we're just going to put our money in here. Apple could just go ahead and throw down $100 million in Bitcoin. They can't just do that. There's a process they have to go through and things they have to figure out, as far as legally how much issue that might give them. So, but again, Bitcoin's at this small enough market cap that it doesn't take a whole lot to move it. So you don't have to have a lot of people coming in like that. So anyway, hey Baker, man, glad you like it, man. Let's see here. Martin says the Fed, the ECB, the Bank of Japan, the Bank of England, and the 29 biggest banks manipulate the market. This is not a free market. This is controlled society. Yeah. Again, yeah. It's all, everything's, everybody talks about the free market. There's a lot of people who out there, they talk smack about, capitalism, and they blame capitalism for where things are now. It's not capitalism, guys. It's government intervention, it's government meddling, interest rates, stimulus money, whatever. If the government is involved in the market in that way, then it's not a free market. And if it's not a free market and something goes on that you don't like, guess whose fault it is? It is the government. Stop giving them more power to continue doing it. Simple as that, guys. It really is as simple as that. I know some of y'all come from more socialized countries than the U.S. And make no mistake about it. There's a lot of socialism in the U.S. too, guys. So maybe, you have a different view of things, and that's fine. You can have a different view all you want. But do some checking. Do some fact checking on that. You'll see. It's government intervention that causes the big boom and bust cycles. Artificially low interest rates lead to malinvestment, which has to correct itself at some point. Trying to get people to get out there and you keep pushing out this credit bubble. Society doesn't do that on its own. It's government out there, low interest rates, makes it easy to get loans and whatnot to get you to spend money. They're manipulating the market. They're manipulating you. So the results from that are the things you don't like. And you say, oh, we need more government involvement. No, you need less government involvement. It's government involvement that's leading to that, guys. But until that happens, either way, what you can do is go in there and figure out how it's working and then just trade around it. So, yeah. Let's see here. Common Man, what's up? He says, I'm calling this now. Bitcoin runs up and flirts with the all-time high and then falls hard, shakes out little fish, back test, and begins the real bull market next 4 months, estimated give or take. Yeah, all you guys coming out here, I refuse to call anything. Maybe the government is part of the free market? No. Because government has control over what's going on. It exerts force on the market in a way in which it is not, because the government can do what it wants. The government affects the interest rates. You can't do anything to change that. So the government's not part of the free market. But anyway, all right, guys, I'm going to get out of here. I'm running over. Really appreciate you guys checking in. Hopefully I didn't run you off with my little rant there about things. But seriously, guys, you are okay to get rid of people online that you don't want to deal with and in your life, in real life, that you don't want to deal with. Stop thinking that you have to put up with them because they're this person or that person. You don't. If somebody is not a positive part of your life, move on. Why are you going to let that continue to rule, to continue to mess with things that are going on in your life? There's no reason for it. When it comes to trading, Same thing, guys. Who cares what some idiot online says? And there are a lot of idiots online. Stop caring. Just the minute they come out, you don't even have to engage with them. They say something stupid, don't even give them a warning. Block. Simple as that. Don't worry, they'll go on and they'll make their silly remarks somewhere else. They're not going to sit there and worry about you a whole lot. So don't worry about them. All right? Remember, guys, the only thing you control in the market is how much you lose. That's it. All right? So when you go out there, make sure you guys are really paying a lot of attention to your risk management. Make sure that's the one thing that you're working on a constant basis. It'll give you your greatest bit of return. It'll protect you the most when price moves against you, all right? You guys have a great day. I will be back on Wednesday at 11 a.m. Central Standard Time. Until then, we'd love to have you with us over here at howtotradetowin.com. Come join us over there, say hi. And get a whole bunch of stuff. Even if you're only in there for a month, there's a ton. There's probably more education in there than you can get through in a month, but you can give it a shot. All right, guys. Y'all have a great day. Great couple of days here. I'll see those of y'all in Discord. I'll see y'all there in the bit. Everybody else, I guess I'll see y'all either on my timeline there on Twitter or here on Wednesday. Take care.